So over at Genesis, I mean, we're a name that's been in this space for a number of years now, and we've really grown from what started off as an OTC desk for cryptocurrencies. So we've added to that over time the lending desk as well. And just to give you some context on the numbers that we're dealing with now, I mean, last quarter alone, we had $5 billion of spot trading volume. We had a little bit over $2 billion in new lend origination. We also launched our derivatives desk. And then on the custody side, which is where I sit, we formally publicly launched our Genesis custody offering earlier this week. So that is the newest piece to Genesis. And collectively, we're bundling these services to move towards a true prime brokerage offering in this space. And whilst the custody is new, it's in some respects been around for a long time. So actually, Genesis acquired Vault back in May this year. And Vault's been around for a number of years as a cold storage custodian to institutional clients. Same profile as those which interact with Genesis, so it was a very natural fit. And we provide in this latest iteration known as Genesis Custody, everything you'd expect from a custodian. So obviously we have insurance on the assets, we have full reporting, we have auditability, and a great long list of assets we deal with. And Bitcoin SV is one of those, a great deal of demand coming in on that side of things from our clients as well.
Fantastic. Now, Gabriel, tell us about Curv, because Curv is not quite the traditional custodian, but serves a unique role in managing the security of assets. So why don't you tell our audience about Curv?
Yeah, that's right. Much different than Volt or any regulated custodian. Curv is a pure technology provider and technology partner to the clients that we work with. So we're a cloud-based enterprise-grade infrastructure provider for wallets and custody. So we work with clients, asset managers, financial institutions, custodians, exchanges that really need a true tech partner. And so one of the ways we do that is by using a technology called NPC, multi-party computation, which we are the leaders in. And so the clients we work with some are crypto native, some are outside of the space but have interest to get in or are already in. And the company was formed in 2018, so been around for a couple of years. Co-founders Itai Malinger and Dan Yadlin work together at the Israeli intelligence unit. So the team has a deep cryptography and security background, and so a really good fit to provide a service for digital asset security.
Great, and you support Bitcoin SV in your offering now, right?
Correct, yes. BSV is one of our prime offerings. So we support the top 10 assets and of course BSV. And so a lot of our clients, some bigger clients, we're chain agnostic. So BSV is one of our offerings that that's important to many of our clients.
Great to hear. Let's talk about just the general concern about digital asset security. I talk to a lot of businesses, enterprises, consumer, retail investors to try and get them introduced to cryptocurrency. And with news such as the Qcoin hack that happened over the last week, the first reaction I often get is, well, it seems so unsafe to hold digital currency. In your roles, can you tell us what you think the biggest concerns are you hear from enterprise and institutional clients and potential clients, and how do you help satisfy those concerns? We'll start with Karen.
So Jimmy, this is obviously, that I've got massive passion about this topic, and security is one of the things we hear about all the time. And it's very interesting because I mentioned in my presentation about this whole concept of people doing self-custody and what that means, because there are a lot of institutional players who have done self-custody, and they set up environments in their offices and they attempt to approximate the type of thing that you would get from a traditional normal custodian who is operating underneath a regulated framework. But the main things that they worry about boil down to 3 points. They worry about segregation of responsibilities. They want to know that there are people who are functioning underneath a structure where no single person has control of their keys and no single person has control of what's going to be done with their assets. So segregation of responsibilities is the #1 topic that I hear about when I'm talking to institutional investors. The #2 topic that they bring up constantly is what happens if there is some form of a natural disaster or if there's a theft, a physical theft. You know, somebody comes into the office with a submachine gun and steals the keys or steals the assets that are being held there. So they worry about those types of things. They worry about a hurricane, they worry about a tornado, they worry about the physical protection. And the third thing that I hear from a lot of institutional clients is while they worry about the security, they also worry about the speed of access. They worry about how quickly they're going to be able to get to their assets if they want to trade or if they want to do some form of settlement. So those are the three things that I hear on a regular basis, or those three elements. And of course, we have answers for all of them, but you just asked about what is it that we're hearing that they raise concerns around.
Well, actually, for some answers, I'll turn to Sebastian. How does your company and its solutions help address those kinds of concerns?
Yes, I mean, likewise, again, we've been in the space for a long time, and inevitably we have clients coming through our door with their own war stories of this space. You kind of alluded to the hack which happened on one exchange not too long ago, and unfortunately that is a very common theme, at least, it happens more often than we in the space would like, which is why, we have a very obvious problem on our hands and we provide a solution to that. So from the security standpoint, I mean, yeah, there is always going to be kind of a trade-off between, storage and the kind of access to those assets versus speed of execution. So on the one hand, you'll have clients who maybe have some level of assets, a small amount, kind of call it a liquidity management, a working capital level of assets on an exchange, perhaps, just so they can move in and out quickly. But again, that poses a whole host of issues, not least the security, which was already kind of alluded to as being very fragile in a number of aspects. But there's also a diminished level of legal ownership as well. I mean, you're not really trading cryptocurrencies on an exchange. You're kind of trading entries in a database, really. Credits and debits. It's more of an IOU. So that's where a lot of clients want to come to us and say, hey, we need something really secure. We're just not comfortable with counterparty risk out there. We need to have a bit of peace of mind for ourselves, for our auditors, our investors, whatever it might be. And kind of likewise, we have our own skill team of security experts coming from UK government backgrounds, working on very sensitive and confidential projects in hostile locations, both physically and in the cyberspace as well. So we provide something which is kind of multi-factor. I mean, as you'd expect, it's not just about segregation of responsibilities or segregation of assets from clients and all the rest, but there needs to be a strong level of client identification and the verification of that, getting everyone comfortable that on the client side, they are who they say they are. So, if things like biometrics come into play and there's a whole bunch of security attached to these various layers, which, we've alluded to a bit in the previous answer as well. But the other aspect, they're looking for in terms of a full wallet management system, they want to have that usability, which again has been touched upon. It's all well and good having something super secure, but if your assets are not available to you at within a reasonable time frame, then that's quite a limiting factor in itself. So at Genesis, we're kind of bundling all our services together as I've described. So you can deposit with us, keep your funds secure, but you have easy routes into our trading desk, into our lending desk. You want to access leverage or hedge out some risk with derivatives. So really bundling those services together and giving one centralized place, which is secure, but also gives you a kind of a bigger picture of functionality as well.
Gabriel, how do you at Curv address these concerns of institutional and enterprise holders of digital currency?
Yeah, sure. So they touched on some good points. I think the most important thing with bearer assets, which digital assets are, is security. So having a really good security layer is the most important thing. And then also liquidity. So the trade-off between security and liquidity is a big one. And I think it's a problem in the space right now with some of the legacy solutions. So with Curv, we don't make that trade-off. We can have airtight security using multi-party computation, and then also give quick access to the assets when you need them. And so with a pure tech stack, which Curv is, and the flexibility of deployments, being able to have programmatic use cases with a robust API, all those things are important to kind of have a comprehensive solution for these digital assets.
So I'll ask this to the whole panel. A lot of the Bitcoin SV ecosystem is very focused on the implementation of threshold signature schemes, TSS schemes, which a lot of entrepreneurs and developers in our field believe will help provide even greater security protections. How do you see are you seeing from your industry perspective, how's that progress going just generally with implementation of threshold signatures across any digital asset ecosystem, and what do you think can be provided more from the developers and entrepreneurs out there to facilitate that? Sebastian, we'll start with you.
Sure. So, I mean, yeah, a lot of our kind of multi-signature or threshold signature is all done, again, kind of off-chain, just have that scalability across the various blockchains and different signature algorithms and what have you. But again, because of us being a custodian and where we sit in this ecosystem, you know, above us we have our clients who are kind of looking for financial services, but then, you know, we're interacting directly with the blockchain technology as well. So we're very close to the layer one, as we kind of call it colloquially. So from that respect, we're obviously very mindful of developments and upgrades on the chain level. So yeah, threshold signatures. I mean, current implementations of multi-signature are very data intensive. I mean, you do your M of N, or, you know, common practice 2 of 3 signatory. That involves multiple keys in a number of cases. It's very, as I said, data intensive. So that takes a lot of space in the block, which again reduces what can be confirmed in a particular block and reduces throughput. So there is a bit of a squeeze in that. And the other thing to note as well is the script also publishes the entire execution path. So you're looking at all the possible permutations a signer could have taken, which again sacrifices some level of privacy. So having these new levels of threshold signature is definitely useful in terms of you're now only looking at publishing the met condition. So you can prove on chain it was done in a transparent way without revealing to the world, you know, all the possible permutations you could have done. And again, reducing that data burden as well. So, I mean, yeah, we are always sticking close to this, and you know, we try to incorporate things as much as possible. We are always reconciling against the blockchain, so our clients can always view their assets directly on a block explorer. You know, we're not a black box in this space. We're very transparent. So yeah, we're always mindful of these, and yeah, we welcome the changes as well.
Okay, Karen, are you looking at threshold signature schemes for your new turbocharged BSV custodial services?
Of course we are, Jimmy. I mean, that was a layup question. Of course we are. And part of the reason we're looking at that is because we are trying to manage this construct that I talked about before, which is the balance of usability with security. But one of the things I think is really important that is critical for all of us to be thinking about is when you're talking about custody, and you're talking about custody in a regulated context, one of the main issues that has actually been an inhibitor to the broader adoption of institutional investors in the crypto world, in the blockchain, BSV, any type of structure that you're thinking about, is compliance, and having the regulators feel comfortable that the structure of the custodian is operating within the confines of what they understand and know and can approve. And so one of the big questions has always been this concept of control. Who controls the keys? Who controls the asset? And maybe I should have said that the other way around, because what the regulators care about is who is controlling the asset, because for the purposes of everything we're talking about, like tokenization or leverage or some of the trading activities, you have to have the ability to demonstrate you have control. And in the digital asset world, the way you demonstrate control is by control of the keys. And so multi-signatures has always been problematic for the regulators, because if you have multi-sig or different forms of mechanisms for establishing proof of the keys, the regulators have a very difficult time wrapping their head around whether the custodian is still maintaining control of the asset. And so one of the reasons we're looking at threshold signatures is that there are ways to use the technology as it's being described, for example, by the team at nChains, where you can still have that level of control while giving the flexibility and usability that satisfies what the end user is looking for. And I'm hoping you're going to ask this question shortly, because there's this whole debate about hot versus cold and how that's going to operate. And there are a number of providers in the marketplace who are saying that temperature really isn't the mechanism you should be using for thinking about custody. But threshold signatures, to me, is a way of addressing some of those issues.
Okay, well, actually, we'll get right back to that topic after I let Gabriel talk about, his company, which is very focused on MPC. Is Curv exploring threshold signature schemes, and how do you think that will affect your business model?
Yes, we are. I mean, we have a team of about 35 engineers based in Tel Aviv. And I think one of the strengths of Curv is that since we are a tech partner to our clients, we stay current and up to date on all changes to public blockchains and what's happening in the space. So as it relates to BSV, we are on top of things, and we have clients that interact with BSV. So it's important for us to keep up to date with our tech stack. And so just like Karen said, it goes back to transparency, usability, and security. And so one of the beautiful things about MPC is that it sits on top of the chain. And so the mechanisms you can implement as far as any changes to the chain or what has to be done to fit compliance needs, can be done with our solution.
One trend that I'm seeing and actually being called upon to help find options for across the BSV ecosystem with respect to threshold signature schemes is the need for a new form of, not really custodian, a trust holder, some company to hold a key fragment. We're starting to call it trust hold or trust holder in the BSV space. And I've been asked by some companies to recommend companies around the world who might want to serve in that function. Do you think that will be a new type or form of custody service that traditional custodians might provide in the future, not holding an entire private key for a digital asset, but key fragments or other data necessary to compute and regenerate the key? I'll start with Sebastian.
Yeah, so we have already today some of that as part of our multi-layer security ecosystem as well. So that fits in quite nicely with, again, I'll talk about MPC already. That is one of the features on our security level as well. So we use that primarily for client authorizations. So that's kind of, one factor of the whole process for us. But again, enabling the client side to hold some piece of cryptographic material, which they can input on the transaction when they're looking to withdraw assets or move something around, make changes. So we can have, some hard-coded certainty about just how legitimate is that request, and that actually the client is aware and also signing off on it. So yeah, by all means, whilst we might hold the private key as the custodian, and again, many layers of protection around that with cryptographic HSMs and encryption and what have you. It is also very important that the client has that element of control in the signing process. So yeah, definitely if there is, again, multiple entities involved in anything, it doesn't have to necessarily be different, like an escrow arrangement. It doesn't have to be kind of like a buyer and a seller who need an escrow account for a transaction. It can even just be one company by itself looking to manage the liquidity across their entities, whereby they move things around intraday. So having multiple cryptographic inputs dispersed on the client side is definitely something we'll see more of in the future as well, and we have something in play today.
All right, Karen, you brought up an important issue or interesting debate happening in the world about the difference between hot and cold wallets. What's your take on temperature as a means of measuring effectiveness of custody and security?
So I'd like to build a little bit on what was said before, which is custody is, let's talk about custody. Let's abstract it to its essence, because effectively what custody is all about, it's about storing assets or storing things, about acting on them, doing something with them, and then providing reporting and transparency. And so to your question, by the way, before about trust holders or people who might hold shards of keys or other types of mechanisms that would enable a client to access their assets, the fact of the matter is a custodian can do any of those things. They can hold shards, they can hold information. For example, if you're doing KYC and AML for a client, you can store the foundational elements that are associated with that. You can store all of those things, and all of that is within the remit of a custodian, in addition to managing private keys and storing the actual digital assets. And so for me, that question about threshold signatures, the question about trust holders, all of those are things that a custodian does. All of those are things that are part of the custodian's actual virtuous circle and ecosystem and how they operate. And one of the things that I think is so interesting, going back to the hot versus cold question, is there's a lot of discussion about the technology, the underpinning technology. Are you storing it on an HSM? And is that HSM inside a Faraday cage? And is that in the middle of a gigantic mountain vault somewhere that can only be entered past 50 guards with submachine guns, versus having something that's always online so that you can take advantage of staking? To me, those types of questions are just the tiny tip of a pyramid that involves a whole series of processes and operational structures, and also concepts about how you are going to limit the amount of surface that attackers can come against. And so from my point of view, the ultimate goal of a custodian is to keep assets safe. That's the primary goal. The secondary goal is to provide user capabilities and user easiness. And so what you want to do is you want to focus on, number one, limiting the attack surface. So, the famous saying about why do bank robbers rob banks? It's because that's where the money is. Why do hackers hack custodians or exchanges? It's because that's where the money is. So one of the things that custodians, in my opinion, should be thinking about is how to avoid having pools of assets that are stored together in a single surface, if you will, and instead distribute the surfaces so that you have a combination of hot and cold, and the combination of user authentication that ensures only the right people can get access to it. So to me, I agree that the conversation of temperature is not nuanced enough. And I think we, as the custodians who are thinking about how we're going to offer this service, need to be thinking about how to basically spread out the surface so there isn't a single point of vulnerability, and also using a mixture of processes and procedures and technology and identity verification as part of how we manage our overall infrastructure.
So we spent a lot of time talking so far about more enterprise and institutional users. I want to take a moment to get everyone's thoughts about the retail investor, the ordinary consumer with their digital assets. Gabriel, we'll start with you. What do you think is more needed to help the ordinary investor, holder of digital assets, feel comfortable in terms of the security and ability to transact with those assets? And is that something Curv's interested in getting into, the more sort of consumer-focused areas?
Yeah, sure. No, it's a good question, and it's a question the whole industry is asking itself. Curv itself is focused on the institutional market, so I don't think we have plans to open up a consumer solution. But one of the things I think is necessary for mainstream adoption is UI, so user experience as it relates to wallets. It is a challenge, and since security is the most important thing with these assets, do we really want consumers storing their own private keys and having to deal with that and being their own bank, basically? Are they ready for that? And so I think the experience for consumers is going to have to be better from a UI perspective. And then also, my thoughts on more consumers coming in is that wallets are not going to look like wallets as they are now in the future. So maybe it's going to be shared custody, shared cryptographic keys, like we mentioned earlier. Maybe it's better UI. It's consumer wallets are connected to certain liquidity sources. There's more composability. So there's a lot of solutions in place today, and I think there's good teams that are working on how to be more inclusive in the industry.
Sebastian, what do you think? What can be done in the industry to improve storage and security solutions for customers, ordinary customers, particularly things the BSV world could do?
Yes, I think, again, it's not so much our focus on the retail side. I mean, we are, again, purely institutions and sophisticated investors, so high net worth individuals in that respect. However, again, it's from personal experience being in this space for a while, I guess some of the themes that do stand out, I would echo the point on user experience and the user interface side of things. So if you just sort of think about someone coming into this space, they maybe get acquainted first with something like Coinbase. It's a simple download an app from the App Store. They understand that. Easy and intuitive enough interface, but again, it doesn't really get them that deep into the crypto world. And again, there's further education required if they want to start using their own devices and using online wallet providers as well and moving things around. So yeah, it gets tricky, I mean, quite quickly. So in the future, you're going to have to remove some of these extra steps. Things like, okay, if I'm an individual who wants to own the latest ERC20 token, do I have to suddenly add a contract ID manually to my wallet to be able to do that? Again, that's something most people probably don't know or think about, and they shouldn't have to think about it personally. That should be something that comes with the solution. So really making it straightforward and as easy as possible. But again, just from a consumer standpoint, I said on the one end of the spectrum, you maybe have those who are buying a bit of cryptocurrency from Coinbase as an example. But then on the other end of the spectrum, there's very few wallets or very few sophisticated users who are doing things like yield farming and taking advantage of the liquidity incentive mechanisms and all this kind of really exotic stuff, which you need to have a good level of understanding to really get into that. So how do you bridge that to your average user? I mean, that's a bit of a chasm. So I'd imagine over the next few years, we'll see more simplicity around providing that to your average user in the retail space.
Karen, any lessons you've learned from the enterprise institutional world that could be applied to the consumer world for security?
So Jimmy, I have to say something to begin with. Is I wish we were all in the same room, because I would love to hug Gabriel and Sebastian right now, because everything they said is so pertinent. So consider yourselves virtually hugged, guys, because frankly, the main thing we need to do, and this is one of the things that is so powerful about BSV and what is being built by all the people in the community who are doing presentations at this conference, is we are basically building that abstraction layer that allows the end user, whether they're an institution or a retail client, to not have to worry about all the technology underneath. I mean, we use Wi-Fi all the time, and we have no idea how much complexity exists underneath that Wi-Fi. I mean, there's millions of miles of fiber and all sorts of circuit boards and all sorts of technicians who are dealing with that, and we don't pay any attention to that. And that's what we need to be building, and that's what a custodian needs to do. A custodian needs to offer that seamless, easy abstraction layer so that the retail client doesn't have to worry about their security or their assets. All they need to do is they need to be able to look at a user interface on a mobile device and say, hey, I want to buy as much BSV as I can get my hands on, and then I want to lend some of it so that I can get some interest on it. And then I want to tokenize my brand new Ferrari so that I can cover the payments and do all of that seamlessly out of a single account. That's what we need to be doing. And that's one of the things that is so powerful about the BSV structure and the layers that are being built by this community, where you enable those types of microtransactions across a very efficient distributed network.
So let's talk about Karen's new business model she's launching. Hopefully, Gabriel and Sebastian, you might have seen Karen's presentation right before this, the supercharged new custodial service with BSV, essentially using custodied assets to create new forms of liquidity, right, tokenized for both institutional holders of coins as well as the average everyday retail holder. I'm curious, Sebastian, what's your reaction to this business model? Is it something, Genesis might go pursue too?
Yeah, I mean, of course, we obviously welcome new innovative ideas as well. It's great for the space, and we are still in that environment where it's early enough that collaboration is still very much at the forefront, and it's not so much winner takes all, and the moats and the walls are already being put down in terms of protecting business models. So the collaboration is still, after being in the space for a few years, is still something that really I appreciate and really I find quite amazing, frankly. It just shows how collectively we can produce something quite amazing for the end user or for the industry we're trying to serve, and the adoption level we want to bring and make this a more approachable asset class, not just to sophisticated investors, but also your average retail user as well. So yeah, I mean, it's good to see what's being built there on the BSV side, and I have no doubt that's going to go from strength to strength as well. In terms of pushing the agenda forwards. So yeah, I mean, fully behind the message and the approach that you guys are taking.
Gabriel, are you hearing of other custodial services that are trying to use custodied assets to offer new ways to trade without the risk of moving assets? I've heard of it from some other custodians. Are you seeing this as a bigger trend?
Yeah, no, I think there are custodians that are trying to. They have the philosophy that you want to keep the assets in custody and then be able to lend them out and earn yield on the assets. Do whatever you need to do. That is a big trend. There's also a philosophy that you want to keep the assets online as they're meant to be to take full advantage of what blockchain has to offer. I think having the flexibility to do both with a good tech solution is the right way to go. There's a few trade-offs from keeping the assets completely offline, completely in custody, and one of those is usability. Maybe you want to have different sources of liquidity that you're using. So keeping the assets in custody and then be able to use the assets, I think that's a great concept for security because, of course, the assets are kept in custody; they're not being moved. But having the option to be comfortable whitelisting an address, sending it to wherever you need to go, whether it's Genesis or whether it's Coinbase or Gemini, and then having the proper procedures and policy controls in place to feel comfortable doing that. And so I think that's the important piece.
Karen, we have a question from the audience that came in from your earlier presentation. Will your custodial service be insured?
Yes, absolutely. And part of it's really interesting because I was one of the first, if not the first, person who got insurance for a qualified custodian through Lloyd's of London. And in the process of doing that, going through that experience of working with Lloyd's of London was extremely eye-opening in terms of understanding what an entity or an institution or a group of people such as Lloyd's thinks about in terms of the risks that are faced by a custodian in that space. And so we are going to build everything inside the Fabriik qualified custody from the start so that it can be insured. And so it can be insured for natural disasters, theft, and for collusion amongst employees. And we're going to have insurance for both the hot online and for the cold. So absolutely, it will be insured.
Sebastian and Gabriel, are you seeing any pressure for your companies or the industry to increase the levels of insurance, for example, that custodial or security service providers maintain? Sebastian?
Yeah, so insurance is always a big topic for all of our clients, and rightly so. It does provide another layer of comfort to the solution. So the way we've been looking at this historically, we have both the crime level, which is covering the hacking and online third-party thefts, and then we also have the species layer. So we've got very robust and comprehensive insurance today. And then again, we've also been working with underwriters for many years, even as part of Vault's pre-Genesis custody. So we've been educating them on this space, explaining the different solutions and security architectures out there. Again, familiar with obviously HSMs. This is something that's well understood over decades of use in the banks, so our clients can get familiar with the ideas as well. They appreciate the risk mitigation that provides and how that's a very secure solution. But then also bringing into the frame things like MPC, which a bit more on the newer side of the technology stack, and we have that as a feature in our offering. So again, working with underwriters, get them comfortable, understanding how that adds a layer as part of our many other layers as well. But then, just really the communication is key, and that's something that has to go across all providers we work with and partners of ours, whether it be insurance underwriters, whether it be the clients or the banks themselves we talk to on solutions in this space. So it's definitely top of mind. I think one thing that'd be good to see, kind of going forward on the insurance side is typically these are denominated in US dollars as a kind of as for the asset versus Bitcoin or BSV, wherever it might be. So having a bit of a mismatch between asset and liabilities there, it'd be good to kind of get to a space where you have Bitcoin insurance for Bitcoin or BSV insurance for a BSV holding, and so you kind of mitigate a bit more again the risk associated with I guess call it the FX price and what have you. So Yeah, there's still work to be done, but again, it's very robust what the guys are already producing in the insurance side of things.
It's a great suggestion. Gabriel, what are your thoughts about insurance pressures in the industry?
Yeah, no, it's a very nuanced topic, I think, today in the industry, and there are some good policies out there, including Curves. We have a really good policy underwritten by Munich Re, and talking to some clients really feel that they need the insurance, and it's important for them, and to signal to their clients that they do have insurance, and to some others, it's not important. They know it's very nuanced. And at the end of the day, they are bearer assets. And so I think what these policies do is they're a testament to the security procedures of these custodians and security providers. So these insurers are not going to underwrite these policies if they think that the solution can be compromised. So the important part is to eliminate single points of failure. Distribute the cryptographic key shares of the signing material, and to put really strong policy controls over the assets. Whether that's limiting a certain user on a platform to a number of transactions per day. So velocity limits could be per week, per month, by transaction count, or by USD value. So all these in place with the insurance kind of has this comprehensive solution, but it is a nuanced topic, and I think the important part is really digging into the details of the coverage and finding out what your provider is offering, and yeah.
That's actually great advice for all the BSV ventures and companies out there as well, policy things. Karen, a comment, and then I'll ask a last question to each of the panelists. Karen?
Yeah, one of the things I was going to say real quickly, Jimmy, is that in many ways, insurance in the industry has been a bit of theater, where people were basically using insurance as a proxy for demonstrating that they had done their homework. And because when you think about it from an insurance perspective, even if you take the entire market cap of every single cryptocurrency that's out there right now, it represents a fraction of what the big insurance providers are insuring on a global basis. So to build a little bit on what Gabriel said, to a large extent, the insurance is really a proxy for demonstrating that the custodian has done their homework and has put in place the processes that are necessary. And I think that's important for people to understand.
Okay, great. Final question. So Sebastian, what's your company's or Volt's and now Genesis experience been so far with BSV, and how can the BSV ventures and companies watching out here work with your company better?
Yeah, so again, our clients, just to reiterate, all institutional, sophisticated investors, and whether they be native to cryptocurrencies or more traditional finance. So, whether they are, supporting all the large caps, and BSV being one of them, they can come to us for their kind of financial services needs. So again, I've spoken about we've got a trading desk. You can get in and out of your BSV positions if you're a hedge fund. If you're a miner and you're accruing a lot of BSV, or you need to get some working capital, you can come to us for loans or equipment financing and all those sort of things. So we provide a very robust solution, not just the storage element on the custody side with Genesis Custody, but very holistic in terms of meeting the needs of any BSV ecosystem participant when it comes down to managing working capital and also managing their risk. So yeah, that's something we bring holistically at Genesis. And our interaction with BSV as a blockchain, the code base is obviously well understood. It's been around for a long time. We're very comfortable with that structure, and transaction building and all the rest. That's very straightforward, because again, we've spoken a lot about, as a custodian, we have to safeguard these assets, but another very key or close second to that would be being able to move the assets around with certainty. So we want to make sure when we do transact and things move from A to B, that process is as comfortable as possible, and we have that settlement finality. And that's when we do get with blockchain BSV, with Bitcoin BSV. But in some areas, some other blockchains, that may not be quite the case. So we have to wait longer for settlement confirms, or we have to have other controls in place. So yeah, from the custody side of things, in terms of interacting with that layer one BSV, we've had great experiences as well, and so have our clients.
All right, Gabriel, what's Curv's been experienced so far with BSV, and how can the companies out in our ecosystem who are watching best work or collaborate with Curv?
Yeah, it's been a great experience. We welcome all BSVers to if they need secure wallets or custody. Obviously, the blockchain is like Sebastian mentioned, the blockchain is functioning well, and it works well with MPC and our protocols. So we have a really good solution to manage user flows, user funds, both in a hot, warm, and cold environment. And so I think as the space matures and more use cases are brought to fruition, there's going to be more enterprises, more financial institutions that are interacting with public blockchains. And I think BSV is probably a good blockchain for some of these companies to do so. And we're seeing that. And, so I welcome any BSV funds, asset managers, traders, consumer applications. If they need programmatic wallets, custody, anything like that, we are happy to help to work with you.
And Karen, you've got the biggest vision so far for Bitcoin SV with custodial services described. What kind of BSV ventures should be knocking on your door to look for partnerships, and how can you work with them?
So basically, there are two groups of people that I really want to be knocking on my door. And number one, I want people who are interested in exploring the vision that I talked about, which is this intersection between the real world and the digital assets, where you can actually unlock the power of all the physical assets that are out there and put them onto the blockchain so that they can be traded and you can get liquidity. So if you have a wallet, if you're an e-commerce provider, if you are offering asset management, if you are giving people the ability to be more entrepreneurial in terms of how they're protecting and managing their personal portfolios, come talk to me, because we have ways to enable that and make that work more efficiently for you. And the other group of people that I would love to have come talk to us, and frankly, I would love to talk to everybody, because the whole ecosystem comes together in this liquidity ecosystem that I've talked about, where we're holding the assets, we're enabling the trading, we're enabling the leveraging, and we're enabling the transformation. And in doing so, we're unlocking all of this really, really intense and fabulous potential for people to take control of their lives and their financial assets. But the second group of people that I would like to have come talk to me are the people who are creating ecosystems of common interests and common goals. So people who are playing in particular industries like healthcare, or who are playing in governance, or who are playing, when I say governments, I mean governments, who are looking at doing things for the public good. And for people who are looking to do things in the charitable environment, all of those are areas that are of great interest to me, as well as the traditional financial services and supply chain and manufacturing. But what I would say, that the one thing I would say, Jimmy, to everybody who's in the audience is, if today you are self-custodying your assets, I think it's very important for you to look long and hard at why you're doing that, and to consider the risks that you're engaging in by doing your own self-custody, and then also consider the benefits that you can have by working with a custodian who allows you to tap seamlessly into this wonderful liquidity ecosystem that the BSV blockchain is enabling. Think long and hard about that and explore the potential that you have by using a custodian.
Well, on behalf of the entire Bitcoin SV ecosystem around the world, I want to thank all of you service providers who support Bitcoin SV with good service. So thank you to Genesis, thank you to Curv, and thank you to Karen's current and new company for custodial services. Thank you very much for this very illuminating conversation about security and custody.